Welcome to Looking at the Markets with David Modell. Pullback trading versus breakout trading. Which one's better? Well, I don't think either one's better, really, but I'm going to talk about both of them today, and I'll tell you which one I prefer. I've noticed that people on YouTube, the chart people, they usually talk about breakout trading, or at least more than pullback trading. But I tend to prefer the pullback trading because with pullback trading, you get to buy low and sell high. And if you've watched my videos, you know that that's one of my favorite things to do, right? To buy at a lower price, not to buy at a high price. So let's talk about what these things are. Now, the first thing I want you to notice is that both this and this are the same with the candles. Take a look at the candle shapes and colors here, and then with this one, they're both the same. So two different people can look at the same candles and see different things. It's kind of interesting. So if you're a pullback trader, what you're going to see is a stock or cryptocurrency, whatever, but I'll just say stock, a stock that's trending up and then finally pulls back. It goes down. So there's a dip after an uptrend, right? And that's what a pullback is. Preferably, you have a long-term uptrend, a stock or whatever that just goes up and up over the long term, and then eventually dips, all right? Eventually pulls back. And you want to make sure it's not pulling back based on some horrible news, like the company declares that it's going out of business, for example, okay? You might not want to buy that dip, all right, because there's a pretty good chance it might just keep going down if the company is really in that much trouble, all right? But if it's just, let's say, a stock that went up, up, and up, and then maybe the hedge funds and the institutions are just taking profits, which is normal, and so you get a moderate-sized dip, and that's normal. You know, stocks don't just keep going up forever, right? At least none that I've seen. So, you know, you buy the dip, as they say, right? You buy it around here somewhere. Maybe you don't buy it exactly perfectly like it shows in this picture, but you know, even if you're not exactly right with your timing, hopefully it continues going back upwards, continues the long-term uptrend. So a short-term dip within a longer-term uptrend that hopefully resumes, right, after you buy the dip. So what's the advantage? You get to buy low and sell high. That's why I like this so much. The disadvantage, the con, is that the pullback may never come, right? You could be watching a stock, you know, maybe it's a really good stock like Apple or something, and it just keeps going up and up and up, and you're waiting for a dip, you're waiting for a pullback, and it never comes. I mean, a pullback always comes sooner or later, right? At least from what I've seen, if you wait long enough. So I don't know if I would say the pullback may never come. I think the pullback will always come. I don't know a stock that just goes straight up forever without pulling back eventually. But you might be waiting a long time. So it requires a lot of patience and a willingness to sit on your hands and do nothing for a while sometimes. Okay, so that's pullback trading. Now, breakout trading, we're looking at the same candlesticks, but looking at them very differently now. From a breakout trader's perspective, what you would do is you would wait until you find a resistance level, okay? A level where the candle went up to, and then, but then came back down, and then went up to that same level, came back down, and then maybe the second, third, or fourth time, finally, a candle closes above that resistance level. And so you draw your resistance level, right? You draw your line where the stock keeps coming up to, but not going past, and then finally it goes above it. It closes above it. And so that's when you might buy, okay? So, and that's the breakout. It broke through or above the resistance line there. So the advantage, and I don't know if I agree with this. I did not make this graphic, so I cannot take credit for it, but always capture the big moves. I don't know about always. You're hoping to, but there's no guarantee that you'll capture the big move, but that's the idea. And then the disadvantage, you might have a false breakout, right? It could close above that resistance line, but then collapse. But that's true about pullback trading as well, right? I mean, you could buy the dip, and then it might keep going down, right? So, you know, either way, it could go down right after you buy it. You know, there are no guarantees of gains in the markets, unfortunately. All right, so I prefer this one because if you look at the two, these candles are the same as these, and I'd rather buy here, down here, than buy up here, right? I mean, you're buying at a lower price. So there you go. But I'm not going to put down the breakout traders. There are people on YouTube and elsewhere who can make this work for them, and that's great. Cool. Nothing wrong with that, all right? So that's my preference. And let's look at a real example. This is from TradingView. I want to give them credit for the chart here. And just take a look at that chart, and what do you see? Well, if you're a pullback trader, you'll see one thing, and if you're a breakout trader, you'll see something else. Let's look at it as a breakout trader first. All right, so as a breakout trader, you'd probably see the resistance line, let's say right here, right? Right there. I mean, everybody sees lines in different places, I suppose, but there, okay? But that seems to be the obvious one. This is Home Depot stock, by the way, daily candlestick chart. But what we're talking about today could be applied to 1-minute candles, 5-minute candles, whatever, right? It all applies here to different time frames. So, so it came up to this level here and then fell back down. So that's 1 data point, 2 data points, 3. The 4th time was a charm. It finally had a candle close above that resistance line that we drew, or that I drew. And then the next 4 candles were red. So you might have gotten stopped out here. Now, if you stayed in the trade, you would have done quite well, actually. It just kept going up and up, right? All right, but if you had gotten stopped out after 4 consecutive red candles, you would have been pretty unhappy. But it kind of worked after the breakout. Not immediately, but eventually it went up. Yeah, it broke out. Okay, that's one way to look at it. As a pullback trader, I notice an uptrend, right? And actually, that's part of a much bigger uptrend in Home Depot stock, right? But here, yeah, an uptrend, up, 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 and then finally pulls back. So yeah, you would have been doing nothing but sitting on your hands for a long time. I guess that's not much fun, but might have been worth it if you're a pullback trader, right? Because hopefully you're not just trading one stock. Well, some people do. You could just trade one stock, I suppose. There might, that could work for you if you want. But if you're watching more than one chart, then, if you're not trading Home Depot, you're trading something else probably, all right? It's not the end of the world to just watch a stock for a long time. You can trade other things. So finally a pullback happens, and hopefully you bought it here. But you know what? Even if you didn't buy at the perfect place, right? Even if you didn't buy it here, let's say you were less than perfect and you bought it here or here, wherever, right? If you had bought it anywhere along this pullback, you would have been fine. If you were just patient, let it wiggle around, be patient, it's going sideways, and then boom, right, it goes up. Okay. Now, a breakout trader would have said, well, yeah, boom, it goes up after the breakout. Well, yeah, but not immediately. There was a pullback after that breakout, though. So it's complicated, isn't it? Right? It's never simple. It's never as simple as this, as the the examples the textbook might show you, right? But I really like the idea of buying, down here, or even if you're less than perfect, buying, let's say, over here. You still would have done really great, right? And buying here is a better price than buying up here. So that's my philosophy on it. I encourage you to try both with demo or virtual trading, meaning you don't use any real money. Try both of them and see which one you like better. Can you combine both? I suppose you could. But at some point, you're probably going to have a preference after a while. Like, do I want to buy low or do I want to buy higher, right? It's hard to do both at the same time. So I think eventually you're going to want to decide which one is best for you. Doesn't mean you can't use both, though. All right. All right. I hope this was helpful to clarify your thinking about which one I like better and which one you might decide that you like better. All right. So thanks a lot, and more videos are coming soon.